What's up, everybody? Hope y'all are doing great today. Happy early Memorial Day weekend. It's been a few weeks since I did a video, but wanted to just come back here and explain to you a very pertinent topic that you definitely want to keep in mind as it pertains to the bond market. Now, for those that don't understand, the bond market is what drives the entire financial system. The reason why is because we live in a debt-based system. Everything is based off of credit. So for instance, if you want to go get a new car, most likely, if you can't afford to buy the car cash, you'll probably get a car note. If you want to buy a house, if you can't afford to buy it all cash, you'll probably get a mortgage. If you want to go to college, maybe you're going to a university and you may not have all the money, or your parents don't have all the money saved, or you don't even have a scholarship, you end up getting a student loan. And as a result, that credit and that debt is essentially what's propping up the system. Now, with that being said, the bond market, which is essentially a barometer of the entire credit-based system, has been going through some very interesting changes over the past couple of months. This has been happening actually even longer than the past couple of months, but more particularly, the bond yields have been going up. Now, these bond yields, which are essentially categorized as Treasury yields because the United States issues treasuries and issues debt, we have to essentially incentivize other nations, other investors to want to buy our debt. And the way that you do that is you end up compensating them by paying them what's called a yield. So as it currently stands, the bond yields, the Treasury yields, have been rising. They've been rising very rapidly for a variety of reasons, some of which have been attributed to the war in Iran. Inflation is essentially becoming a bigger issue once again due to the fact that the oil prices are extremely high and those costs end up getting passed through to consumers. But in terms of bonds and keeping it on topic, individuals that want to invest in bonds or buy the bonds, they are incentivized basically by the yield that is promised or paid to them. It's almost like if you essentially are lending money to your uncle and you tell your uncle, hey, listen, like, I know that you have a job, I know that you seem to be credit worthy, so I'm gonna give you $100 and I'm expecting that you'll give me $100 back in addition to interest over the course of this loan. And maybe your uncle says he's gonna pay you back the full $100 with interest in 1 year. That's the same way that the bond market works, and it's the same way how these treasuries and the yields that they are using to incentivize investors, that's how you're trying to compensate them, or you're trying to compensate foreign countries that are buying the debt. Now, taking that into consideration, when yields go up, that also impacts the borrowing rate that you're going to pay as a consumer. So at the beginning of this example, I was explaining to you all how everything is a credit-based in our debt-based system. If you want to get a mortgage, if you get a car loan, if you're going to college and you end up getting a student loan, it's all debt. As a result, the 10-year Treasury yield is what dictates that borrowing rate that you're going to pay as a consumer. So the 10-year rate has been up. I think it's like at 4.5 right now. The 30-year has been up. The 20-year Treasury yield has been up. And at the end of the day, all of these yields are dictating how much your borrowing costs will be as an individual, particularly the 10-year. And it's important for you to understand that. And the only way that that situation can get addressed is if more capital and more dollars are infused into the system and more debt is created. And that's essentially where we're at right now. There's a new Federal Reserve chair, Kevin Warsh, who was just essentially appointed to his position like last Friday. And now he's essentially going to be tasked with handling this situation. But at the end of the day, you have to understand why the bond market is a source of truth. It is essentially the signal that is going to tell you what's really going on underneath the hood. Most people focus on the stock market. I always say this. I've said this on Twitter Spaces. I've said this in other Instagram videos. And I've said this on our podcast with the Hard Money Hustlers, which you should definitely check out. Shout outs to Nolan, Rashad, and Sean. Those are my guys, and we record often. But the real key to understand is that in a debt-based system, you have to be aware of the Treasury yields. You have to follow it. Most people, they follow the stock market only. They're looking at the noise that they're seeing in the stock market. They're seeing the headlines about the S&P being up. They're seeing these headlines that SpaceX is essentially going to be IPOing. OpenAI is going to go IPO soon. Nvidia, AMD, Micron. But at the end of the day, the only source of truth is the bond market. Why? Because we live in a debt-based system. So once you understand how the system works and you understand the financial system as it pertains to bonds, you can see through the noise. You have to be able to see the forest from the trees, right? You have to be able to understand what's going on. And a lot of people, they're unable to do that because they're only following the stock market. I'll repeat that. We live in a credit-based, debt-based system, and the bond market is essentially what's going to dictate your borrowing rate as a consumer. It's going to dictate all of the rates, essentially how much debt investors, foreign countries want to buy. And if they don't trust that America and the United States is going to be able to repay its debts, that's essentially going to lead to individuals abandoning the dollar. We're already seeing right now that a lot of nations and individuals have been accumulating hard assets and hard money, but that's outside the scope of this video. What I really wanted you guys to understand in this short video is that the bond markets are truth. Literally, the bond markets are truth. And here's the thing. When the bond yields go up, this is something that's very important to understand just as it pertains to the mechanics of bonds. When yields go up, that has an inverse relationship to the price of the older bonds. So for instance, if I had a bond that I ended up buying in early 2025, and all of a sudden that bond is paying me a 3% yield over a 20-year time period, the new bonds that are 20-year bonds are going to essentially be more sought out by investors. Nobody's going to want to buy a bond or buy the bond that I have, and I have to sell that bond at a discount. So as a result, anybody that's holding the old debt as yields go up, they're underwater and they have a bunch of unrealized losses on their balance sheet. A lot of people don't really talk about that. And you have to understand too that a lot of the debt that is essentially being infused into the system as it pertains to bonds, as it pertains to the treasuries, whatever, all that debt is being plowed into 401ks, pensions. It's essentially what insurance companies use to essentially be able to pay out premiums, right? Like if they have to make, if people have claims and certain things like that, if they crash their car, the bond market is essentially driving the entire financial ecosystem. So most people don't understand that, and that's why what we do at SimpMe, everything that we do is about spreading freedom literacy, but actually teaching you the fundamental aspects of how the financial system works, because we're trying to march towards freedom literacy. So at the end of the day, if you enjoyed this video and this explanation about bonds, I plan to do more series about it because this is something that I'm definitely going to keep an eye on. But if you follow the bond market as a source of truth, you won't be confused and you won't be led astray, especially when you see headlines when people say everything is great because the stock market reached an all-time high. Well, guess what? The bond market is the source of truth in a debt-based system, period. So with that being said, like, comment, share this video with a friend and someone that you think would be interested in learning more. And if you also want to learn more about what we do, definitely hit the links below. Peace.